Is Krishna Kumar remotely. Krishna, good morning to you. I want to first begin by asking you how the market's looking like, how they're taking off this morning.
But before we get into how the markets are looking like, I'm going to tell you what the cues are for the day in terms of what you can expect as far as the markets are concerned. Bear in mind, it's just been about 45 minutes or so since the markets opened. They're up currently in the green, up about 0.5%, 0.65%, up about 431 points. The Sensex, that is, as far as the cues for today's markets are concerned, the US Federal Reserve definitely, it is likely to hike interest rates one last time ahead of the all-important Federal Open Markets Committee or FOMC meeting, that is currently underway as we speak, and that has been underway last night in the US as we speak, and then also by today, by US time today, we are supposed to get the interest rates. What is going to be the hike exactly? So what is going to be the final interest rates that US Fed is going to arrive at? So that will definitely impact the way the markets trade going forward. Also, bear in mind, apart from the US markets and the US Fed, that there's also the boost that India has got in terms of the IMF raising its India GDP growth forecast up above the 6% mark. So that is another factor playing in the minds of the markets this morning. So keep in mind of that. And also, as far as specific stocks are concerned, as you can see, Tata Motors DVR gaining 15%, whereas L&T buyback. There's a buyback at L&T, and that is also showing up on the stock. Tata Motors, as I've been mentioning, handsome returns on the stocks. Both these are big stocks that can keep the momentum going. For now, Sensex up about 400%, 400 points, up about just about 0.5%, Shweta.
All right, Sensex is up about 0.5%. I'm looking at Nifty 50, which is also up almost 0.5%, 113 points. And all those big triggers, of course, FOMC being one, we are going to get some sort of I'm sure with the announcement, by the way, of FOMC will come in later today as per US time. So by tomorrow morning, we'll have an announcement whether FOMC has hiked interest rates or not. But some of the key stocks that we continue to focus, and that is L&T, Tata Motors, Bajaj Auto, Asian Paints, all of them released their results yesterday. We discussed Asian Paints. Numbers were better than expected. Stock took a beating, was down about 4% when it closed. How's the stock performing this morning, Krishna?
Which I'm not able to hear you right, Shweta. Which stock are you talking about?
Asian Paints. I'm also going to open it here on my laptop as we speak. Asian Paints stock is also down.
Currently trading in the red, Shweta, right, because it's currently down very little. It's actually Asian Paints is trading flat, so to speak. In the red, down about 0.07%. It's barely half. That's not even 0.5%. So there you go. The numbers on the screens, the earnings over there telling a story. But despite those earnings and numbers, the stock not really shooting up in morning trade. We'll have to wait and watch that, despite an about 23% margin that we're talking about over there. EBITDA, operating profits, up over 35%, 36%, and net profit up over 50%. Somehow, Shweta, yet to be showing up on the stock as of now. But then again, the stock is not necessarily down. We're yet to see any kind of gains this morning in trade so far. But we'll have to wait and watch on how the Asian Paints stock reacts to the earnings through the day.
Okay. Another important company that came up with its result was Larsen & Toubro. I'm going to quickly read through the result numbers. Perhaps Krishna can apprise us on how the stock is doing this morning. But engineering major Larsen & Toubro reported a 46.5% year-on-year growth in consolidated net profit for the quarter that ended June of 2023, so essentially the first quarter of the year. Consolidated revenue also increased sharply by 34%. Net profit and sales were way higher than what was estimated. Also, the board recommended a dividend payout of 6 rupees a share, and also in fact approved a buyback of worth 10,000 crore rupees through tender offer route. What does this buyback mean for shareholders, Krishna?
Right. One thing for sure, ever since L&T announced results, it was expected that the stock was meant to open higher. The stock was currently trading around the 2,500 mark. The L&T stock And the stock is set to show a strong uptrend based on those results. That's what the analysts of the street have been saying. So L&T, if you see those numbers over there, it's great numbers, profit. Again, 46.5%. These are good numbers, and in the sense that L&T stock is also up 2% in trade today, and that is in line with what the street has been expecting, Shweta. So no surprises in store. Lots of good news coming in from L&T, and that reflecting in the stock as well.
All right, and apart from Bajaj Auto, I think it was Tata Motors that released their results late into the evening, but we'll go to Bajaj in just a bit. Let me quickly apprise our viewers with what happened with Tata Motors. Tata Motors is, as expected, swung back into action. Net consolidated profit was at 3,203 crores for the first quarter, boosted, of course, by improved margins in the sales of passenger vehicles business and a robust sales in the luxury car unit, which is the Jaguar Land Rover. It appears that passenger car business and the luxury car businesses seem to have, give some sort of pump up to Tata Motors and its revenues, and obviously its ambition into what luxury car market is going to be in future.
Right, Maruti's numbers, as you're rightly pointing out, the SUV play, it's been launching one new model of the another. The most expensive Maruti car from the Maruti stable has also been released recently. So, in that sense, we can expect the way forward from Maruti to be good as well. But for now, the earnings for the Q1 of financial year 24, yes. As the YOY change is telling you the story, it's from a loss to profit. It's a great traversing that Tata Motors has done with nearly 13% margins and a 42% growth in revenues. So good numbers there from Tata Motors. And also the main the news coming in, the A ordinary shares, which carry 1/10 of voting rights of ordinary shares and are entitled to 5% points higher dividend. So the conversion of DDR shares to ordinary shares is also an announcement that's come as part of the Tata Motors results. And what I would be interesting to see here is that where it plays from here on. It has been quite a struggle. It has managed to establish a Nexon as a great as a number one selling SUV, compact SUV in the Indian market, and that has happened recently over the course of the last 1 year. So with Maruti now coming into play with all its new lineup of cars, Maruti's most expensive cars, Tata Motors does have a lot of competition with Maruti in that sense, and try to gain a dominant share of the Indian car market, Shweta. So all of that will impact its ability to keep the profits up. It has converted a loss to profit, but for these profits to keep going up, a lot will depend upon Tata Motors and its EV play. Bear in mind, it's also setting up, you have heard news about Jaguar Land Rover is setting up a battery plant in the UK. We'll have to see how Tata Motors and its SUV and EV play, what the plans it has in India.
All right, and also we continue to track Bajaj Auto results, which also came out yesterday, signaling a strong number there. And as far as uptake in the consumer market for auto is concerned, two-wheelers, four-wheelers all seem to be doing well, which is good news as far as the India consumption story is concerned. But another stock we are tracking this morning, and that is that of Adani Group. Adani investors, in fact, made bumper profit. The market cap of Adani increased by as much as 50,000 crore in a single day. What led to this sort of increase, Krishna?
I know they are up. Let me give you the facts of the matter actually. Adani Group stocks are up at 10% in a surprise rally. That's what's essentially happened for all those big numbers. 10%, all 10 stocks from billionaire Gautam Adani's belt ended in the green zone as of Tuesday. So in fact, Adani Green was locked in the upper circuit of 10% as well. A lot of buying interest coming in, in Adani Green specifically speaking. And also Adani Power shares were up 9.2%. Adani Transmission was up around 8%. And then also, you have the recent, bear in mind there has been a recent declaration, disclosure from Adani Group that the US-based GQG Partners has picked up another 3% stake in Adani Transmission, also helping Adani Transmission shares. So, all of which resulting in 50,000 crores plus of market capitalization being added. All of it basically means that suddenly there is, from the times of the Hindenburg report, when Adani was a sort of a touch me not darling as a stock, as a group of stocks, to now finding favor with investors in India, in the Indian stock markets, back them. They're all back buying Adani shares. They're saying buying interest from domestic investors go up considerably after all the talk. Bear in mind, a lot of the speculation that we put into rest. You had Gautam Adani recently, come forward himself and defend all the allegations against that has been levied against by the Hindenburg against Adani Group. So that is also clarifying a lot in the minds of all investors. Bear in mind, not just individual retail investors like you and me, Shweta, in the Indian market. We're also talking about HNIs. We're talking about anybody who has any interest of investing in the Indian markets. I now see value in Adani. They're seeing that the clouds are seemingly passing over, that sort of hung around over Adani seemingly passing away, and which means that let's get back to the growth story of Adani. That's what it's looking like.
All right, and if I'm looking at the market cap here, market capitalization of Adani stood at 10.5 lakh crore as of yesterday. The M cap is around, and it's in fact far greater than what it was up until last year during same time at 10.1 lakh crore. Can we see that the cloud of doubt that was hanging over Adani, Amit, is far behind now?
Oh yeah, they are more in the news for good reasons now. Yesterday, and companies that don't carry the name Adani are also up. ACC Ambuja Cements are up 4% after the news came that they are ahead in the race to acquire Sanghi Cement. So that is happening. Closer to what we do, NDTV is up 5%, along with Adani Total Gas. So Adani Ports and Adani Enterprises each have risen 2%. So it is all the most of the big companies of Adani, we see the arrow facing upwards in recent times, and they're back to acquiring and expanding. So that is happening.
Good news, Krishna. If come to think of it, the total market cap of the 10 Adani group of companies was over 10.6 lakh crore as of yesterday, which, as I mentioned, is higher than what it was around the same time last year. Looks like the shred of doubt that was remaining post Hindenburg seems to be now out of investors' minds specifically.
Oh, definitely. And you're seeing that in the stock this morning as well. Adani Enterprises stock up this morning as well. You check any Adani stock this morning, they're all up, all pointing to the fact that any doubts that you might have had about the Adani stocks and their way forward, are clearly, the markets are clearly doing away with those doubts. So you sort of have to read this as cues from, from the street, from Dalal Street. As far as Dalal Street is concerned, they're seeing a value in getting back to Adani stocks. Maybe there's some money to be made in all the corrections that the Adani stocks have witnessed in the recent 6 to 7 months. So in that sense, when you talk about buying in dips, I'm guessing a lot of buying in the Adani dip that has happened in the last 24 hours or so, that you're witnessing this huge surge. Because bear in mind, the kind of drop the Adani stocks witnessed post Hindenburg report were incredible. The questions were raised on, will this last forever? Was it going to completely trade at these levels forever? Will the Adani stocks ever see the pre-Hindenburg levels? Looks like we're right there. Shweta,
it's already there.
Levels already
Absolutely.
there. And going further and going even further high. It's not about the pre-Hindenburg levels. It's about how high
it's
absolutely go from the pre-Hindenburg levels.
Absolutely. It's beyond the pre-Hindenburg level. In a sense, good news there for Adani. Some sort of trust that investors are finally putting, faith they're finally putting in Adani Group stocks. Of course, Adani is yet to get a clean sheet. We continue to track that story. August is just around the corner, which is when SEBI is expected to tender its report on what exactly transpired and whether allegations that Hindenburg made stand any merit or have any merit in them at all. We will of course keep bringing you those details, but another important story that we're tracking is in terms of rice. Very recently, and Krishna, this is an important story because we tracked this story here, it did get a lot of traction online as well. Government banned import or export rather of non-basmati rice to other countries. Now, India continues to be a dominant player as far as rice exports is concerned, holds around 40% of the market share. This move was likely to hurt other economies, but it's done well for India because the domestic prices of white rice have come down and come down significantly, 4,000 rupee a ton.
Right. Shweta, all this has to be connected in a sense as to what happened with tomatoes. with tomatoes, what happened was that there was lesser sowing. That was the fundamental reason. There's been lesser sowing of tomatoes in this season, which has led to lesser production of tomatoes. And also with monsoons playing havoc, a lot of tomato produce had gone away, which is the reason why you're seeing these insane prices of tomatoes in the Indian market. Now, thankfully, rice was also going in that direction, but thankfully that process has been stopped thanks to some intervention from the government, because there's been rice sowing again has been under duress as far as this year is concerned. So lesser rice is being generated in India, whereas the consumption is not going to go down at all depending upon that generation of rice. So which means that there had to be some intervention in terms of the amount of rice that we're exporting out of India and not keeping in mind the domestic consumption. So clearly the averaging out of rice prices and the fact that they haven't shot through the roof. Rice, such a staple grain across India, north to south, east to west. You cannot possibly have a rice crisis, Shweta. A tomato crisis is bad enough, and then all these vegetables, and you can do away with tomato and even ginger. We've seen ginger prices go up by around 200-300% as well. So you can do away with tomato and ginger, but I don't think India can do away with rice from its thali, from its daily meal. At least one meal of every Indian a day is based on rice. So, there clearly was a requirement for a government intervention, and comes the government intervention, and smartly so. It is the non-basmati rice exports which have been cut down. Bear in mind, a huge amount of Indian consumption of rice is not exactly basmati, because basmati is largely consumed, in the north, and in the south and other parts of the country, basmati is used for special occasions, whereas the other versions of rice are the ones that gets consumed on a daily basis. And also, exporting basmati is a great cash cow for India, so we need to continue exporting basmati, huge demand across the world. So smartly, what the government has done is that keep up with the basmati exports, but as far as the non-basmati rice is concerned, keep most of them in India, because we're going to need them, Shweta.
All right, and of course that has resulted in prices of white rice, non-basmati white rice going down, which is good news for a lot of people who were already reeling under pressure, paying through their noses for their humble tomato, and of course for vegetables and fruits and pulses. So staple rice, which as Krishna mentioned, from north to south, at least one meal a day, rice is consumed. It's on the thali, it's on the table. That is likely to come down, if only, of course, if your exporters, your manufacturers decide to pass on that benefit to the end consumer. We will of course have to wait for that.
I think if the government has taken that decision, I think they will ensure the public distribution. And I think the people needed that. Some good news. Like Krishna said, you can do without tomatoes and ginger and coriander. Probably not rice.
Probably not rice. Absolutely. And so we are going to move on now and move on to a story that we continue to track, and that is by the way of IMF and India's growth story. Krishna, growth story and India's growth story as well augurs well, looking good. Not just the world economic growth, which IMF says is going to be better than what was expected in the first half of the calendar year. That has been revised upward, but specifically for India, India's growth has also been revised upward. IMF now pegging the growth for at least financial year 24, the upcoming year, to be at 6.1%.
I think people should be used to this sort of news coming this year at least, because IMF has been, and other rating agencies have been upgrading India constantly in the last few months. So after giving it a low, so that is good news. Our fundamentals are looking good despite whatever or everything that is happening around the world. We are one of the few economies that are standing out. Recession has not really touched us. We have taken care of inflation despite everything that's happening around us. The unseasonal rainfall, climate, war, everything, supply chains, all the issues that there's a laundry list of that. But we have still stood out, and we have maneuvered these difficult times. And how? So the upgrade that you're talking about is no surprise actually. It's been happening, and I think the audience who are following this news should be used to it now.
Absolutely, and specifically for this year, before I go to financial year 24, I want to talk specifically about this year, Krishna. This is good news because India's economic growth stood at about 6.1% for the March quarter. Now, this was better than expected, which pushed the overall growth to almost 7.2% for financial year 23. far greater than what even government estimated. And now for financial year 24, IMF says it would be about 5.9% as of April. It now says it's going to be about 6.1%. It's too early. We've just started this year, but all in all, it is good news because as you know, Amit also said, India continues to be resilient to the economic imperatives that are playing out on a global scale, your supply chain disruptions, your recessions everywhere. India's macros are looking robust. They're looking strong.
Right, and India's domestic investment is also looking robust. In fact, that's the specific reason, you're seeing IMF upgrade its India GDP growth forecast from 5.9% to 6.1%. Let's begin by looking at this. With this, nearly every estimate of India's GDP for financial year 2024 is above 6%, nothing below 6%. The lowest, incidentally, is IMF at 6.1%, because bear in mind, the Reserve Bank of India has pegged India's GDP growth at 6.5% for financial year 2024. You have other World Bank also at 6.3%, Asian Development Bank at 6.4%. So it's all in that 6 to 6.5% range as far as India's GDP growth for financial year 2024 is concerned. And with this, India does retain its fastest growth. Well, so World Bank says 6.3, RBI says 6.5, IMF says 6.1, Asian Development Bank says 6.4. So that should tell you an idea of what is happening as far as FY24 is concerned. Yes, it is going to be lesser than what the previous year was, but then the previous year's GDP, bear in mind, had a really low base effect coming on the back of the pandemic years, and last year was good growth. So to post another 6+% growth of GDP on the back of last year's stupendous growth of over 7%, that's really good news, and it reiterates that point that as far as post-pandemic economic recovery is concerned, India is definitely leading the world with the way it is recovering. And even as that recovery takes place and that recovery gets sort of sabotaged by the Russia-Ukraine war, India is able to even manage to tide through that as well. Not just is it doing its post-pandemic recovery well, side by side it's managing its situation in the Russia-Ukraine war as well. This is great multitasking as far as India's economy is concerned, and all that is hopefully going to show up eventually when the financial year 2024 GDP numbers come out. Great expectations. I'm hoping that the final tally beats even IMF's expectations as well eventually. But for now, these expectations have been raised from 5.9% to 6.1% by IMF, based on the way the last financial year ended, the way that you see the domestic investment demand pick up in India. That's what the IMF is picking up, and that is the reason why in April it gave a 5.9% GDP growth forecast, which is in July now, a few months down the line, is upgrading it to 6.1% in an environment where everybody else apart from the IMF has pegged India's growth above 6%. So it'll be interesting to see how much more this gets revised going forward.
Right. Absolutely. It seems that there's this constant revision on the cards, obviously with other global agency, including ADB, pegging India's growth to be an upward of 6.2%.
Yeah. And I just want to add to what Krishna just said, and you just mentioned that all the things that we are doing right come into the news, but it is certain little things also that the government is doing right. Now, capital expenditure was an area of concern, and that mostly comes from the private sector, should come from the private sector. But the government, to boost it in this budget, has taken up, has allocated 10 lakh crores. This is up from 7.5 lakh crores that was planned last year, to boost basically capital expenditure. And this will basically pump prime, and probably the private sector will follow. And so these are the little things that of course is the expectation. That's the expectation, but it should. So the government is doing certain things right, which do not get reported. We are the big things they are doing right, or they're at least trying to get there. So yeah, so probably the rating agencies are beginning to see all these things. Okay, lovely. Good to know that. Hopefully rating agencies are going to see this through very, very soon, and as Krishna said, numbers do tend to get revised up until very end. But another sector that is in news, and that is aviation sector. Go First, it appears, has successfully tested its flight, Amit,
and it is coming back. It's coming back very soon. It's asked airports to
Restore
slot
slot.
it in its charts, and has also tweeted out. I don't know if we have the tweet. We'll try and pull up that tweet, but saying that we have successfully tested and we're coming back.
Yeah, so they have requested to restore certain slots. They had gotten a conditional approval from DGCA to restart operations in 15 aircrafts and 115 daily flights. And of the charter services, the Delhi Srinagar, Delhi Leh, and Delhi Thois routes are also in the plans. So 114 daily flights added to the kitty of the consumers. What we worry about prices, they're looking to come down.
Okay, hopefully it will come down very soon. But Go First coming back is important to aviation sector at large, Krishna. Aviation sector that so far is becoming, many would say, a duopoly. Go First could challenge that duopoly if it comes back with just under 27 aircraft. But Pratt & Whitney, of course, has said that they are going to keep supplying 5 engines every month, which means more and more flights would be operational.
Wait, let me begin with the latest update on Go First, Shweta. Lots of talk about all these things, engines and flight, all that we've known. What really set the cat amongst the pigeons or set the buzz going, 24 hours ago was that little video clip that got tweeted, which witnessed a Go Air flight moving around in an airport and even taking it to the skies. So that clip of a Go First aircraft in the airport made people wonder, is it ready already? Is it ready for takeoff already? Because bear in mind, the DGCA has given a preliminary approval, the Directorate General for Civil Aviation. There's no final approval.
All right.
So conditional approval.
Conditional approval, of course. We don't know. I mean, I think it's important to point out, we don't know when the flight resumption will happen, but it could be as latest as next week.
Yes.
Is there a date to it yet?
That's not been reported as yet. The approval was conditional. There has been a request to restore slots. So yeah, it's in the month of August, but the exact dates will be out soon. And they're making all the right moves to gain consumer confidence. All the tweets of basically the planes actually in function. It'll all add up to basically get consumer confidence back in Go First, which they need a lot even when they restart their flights.
Well, that is going to be good. It's going to be good for all, people at large. It's going to be good for the aviation sector, which has been marred in a lot of controversy, plaguing with airlines going out of operation every few years. But we're going to move on for now. And Byjus is a story of Indian startups that we continue to track in what could be a latest bummer for Byjus and Byjus Ravindran particularly. Process, which was one of the investors and had a board member, one of the board members that quit after those allegations that came out in open that perhaps there is corporate mismanagement at Byjus, has now finally come out and made some very scathing remarks. These remarks have potential to challenge a lot of notions or beliefs that are being held on Byjus, against Byjus, and particularly that of whether there was corporate mismanagement or not. Essentially, Byjus Ravindran, who's here on our screens, allegations say that he was not paying heed to what his board members were saying, asking him to do, and perhaps also sometimes neglecting the advice that is being offered.
All those mistakes have been made. Process downgraded Byjus considerably. They were an investor, have been an investor in Byjus since 2018. What they have said is that the key management of Byjus disregarded advice on key matters. So that has been their allegation. They have broken their silence right now. But they have also said that they have confidence in the company in the long run to be a market leader and a pioneer in the edtech space. That is the one part of the news. The other part, which will drive some confidence into Byjus investors and people who are following the company, is that Byjus has remitted its employees' share of the PF corpus. 14.6 lakh that was submitted to for the Provident Fund for 738 employees in June, added to the 24,818 employees share that it had remitted in the month of May. Now, Byjus has been constantly repaying the PF from last year's salaries and they have before this repaid 26.48 lakhs of its share of the of employees' PFs. So it has been doing all the right things in corporate governance right now. Mostly probably as a result of the two board members, advisory members that have come on board, Mr. Mohan Das Pai, Mr. Rajneesh Kumar. So they have been doing the right things. But yeah, process people left the board in the month of June. They were unhappy with Byjus. It is no secret because they downgraded them considerably. So yeah, so Byjus will have to take these things in its stride, but continue to do the make the right moves at least on paper, in real terms.
Make the right moves at least now. And this is the first time, and remember, this is the largest, Process is one of the largest external investors in Byjus. Byjus, a company that is one of the biggest Indian startup, approximately valuation at this point stands at $22 billion, India's most valuable startup, as many would call it. On June 22nd, and let me quickly jog our viewers' memory, we have Krishna back with us. On June 22nd, we heard that Deloitte has quit as a global auditor for Byjus, which was a huge setback for Byjus. Reasons were there was a delay in sharing information with respect to financial reporting for last 2 years, not this financial year, the last 2 financial years. And Deloitte said that due to its inability to fetch these reports on time, they're quitting, post which 3 investors on Byjus board also quit. All of this came down heavy on Byju Ravindran, post which he had to come out, clarify a few things. But for the first time now, we are given to understand that Process is saying that we were not heard, and that's the reason why we quit. Krishna, this clarification, in a sense, is going to be very difficult for Byjus to tie it around.
Both actually, not just Process. You have Peak XC partners saying the same thing, that their intention or their efforts to improve governance and compliance norms regularly kept getting sidelined. And that's exactly what Process is saying. Process's own representative on the board of Byjus was almost regularly ignored every single time he brought up governance and compliance issues, and that's big. 3 people resigned from the board of Byjus in the month of June. One is the representative of Process, Netherlands-based investor in Byjus. Bear in mind, Process still continues to hold its stake in Byjus. The only thing it has done is that it's devalued its stake considerably, but it continues to hold that stake. But its representative on the board of Byjus did resign, along with that representative, Peak XC Partners, formerly Sequoia. Peak XC Partners also resigned from the board, and the Chan Zuckerberg Initiative, the other major investor on the board, also resigned in the month of June, which basically meant that for the last 1 month or so, the only 3 members on the board of Byjus have been Byju Ravindran and his family. Byju Ravindran, his wife Divya Gokulam, and Byju Ravindran's brother Viju Ravindran. So currently, 3 people, all 3 family members of Byju are the ones who are there on the board after this resignation. And even as stock has resumed of getting those independent directors, board advisory committee that the Byjus is going to form, they're going to have independent directors, everybody from former SBI chief Rajneesh to Mohan Das Pai, to all these big names that's going to be constituted. We thought that's good news. That's going to sort of restore some of the faith about Byjus in the minds of both investors and people alike. But even as that board keeps getting formed, you have news coming out that the board emptied out in the first place simply because Byju Ravindran and his team and his management refused to listen to any appeal for improvement in the compliance norms of the company or the governance, the way the company is run. So the biggest investors have not been heard by the management, and that's a big allegation, because this is the first time, bear in mind, that all these resignations have come with a reason. The reason was not officially, didn't come out before. Byjus, in fact, said that when the resignations came out, Byjus said that their shareholding threshold went below what is required to have a board seat, and hence they resigned from the board because their shareholding has gone down, so to speak. But then again, the question is, why did the shareholding go down if that was the case? Clearly now, this is not about shareholding threshold for a board seat. This is about the biggest investors in Byjus who are also big investors in other big startups in India and across the world, them officially being disillusioned with their presence on the board of Byjus. We are here on the board of Byjus, we've invested in Byjus, but we have not heard, and we are seeing some obvious problems in the way this company is run. And they make another point, it wasn't run like a company of its size.
Right.
That's the point that they're making. Like for some reason, it kept operating like a little company, depending on what the whims and fancies of Byju Ravindran and his family. That's what it sounds like from what they're saying. Because when they have their own representatives on the board and they're not being heard, and it's just the Byju Ravindran family making decisions for Byju's, it is problematic. The question is, when they have a new board now being set up, how much will the management listen to the advisory of this new board, new independent directors coming on board, and that will be crucial, Shweta, going forward for Byju's to mend its ways and have a more stable future, if at all, going forward.
Right, and of course, Byju Ravindran and the two new board members, Mohandas Pai, Rajneesh Kumar, have their task cut out for them. It's going to be difficult to tide over these allegations. Process has come out on record. If other investors do come out on record as well, I think it's a matter of image. While Byju's is trying its best to tide over the existing financial crisis or absence of enough financials. It's closed down certain operational offices in Bengaluru. It's also renegotiated terms for its term loan B, which is over $1.2 billion. All of that looks good on paper, but as far as image is concerned, Byju's got a lot to do in order to tide over these allegations and tide over the allegations of an image makeover is, I think, in offering for Byju's.
I think, like what Krishna was saying, how much will they listen? I think it is time they will have to listen.
They have to listen.
So
absolutely.
They were riding a wave, and they probably threw corporate governance issues to the wind in those times. Now they are in a situation they will probably just have to listen and make small strides towards recovering their lost ground.
Right, lost ground, especially in terms of, I think, the image makeover that is much needed for Byju's at this juncture. But moving on to another important story that we're tracking, and that is with respect to GST evasions. With huge staggering numbers, evasions to the tune of 3.3 lakh crore rupees in last 5 years.
It's a triple Nelson, 3.33, it's that ominous.
Trillion
of GST evasions in the last 5 years. Recovered amount of that is also in trillions, 1.08. 25,449 fake GST registrations were detected between 2019 and 2023 financial years. 2,154 fake GST registrations were suspended. 17,104 fake GST registrations were cancelled. Now comes the interesting part. The highest number of fake GST registrations that were detected came from the city of Delhi. 5,810, followed by Tamil Nadu, 2,654, followed by Gujarat, and then followed by Punjab, and then Maharashtra.
All right.
So it is a malaise. It is something that it's good that it's been detected, it's been corrected. But we spoke about GST yesterday also. So they're teething troubles. I mean, ever since GST has started, and it's a big country, it's a big exercise. So I think these things will happen, and it's good that they are being detected and being taken care of.
It simply means that people are getting more and more creative, to my mind. I'm looking at some of these numbers in terms of the recovered money. The nearly 1/4 of the money, which is 1/4 of 1 lakh crore, was recovered solely from Maharashtra. Obviously, at the economic hub of India. All in all, I think people are getting very creative around evading GST, coming up with fake GST bills, registering themselves under fake GST accounts, etc., etc. I think about time for government to tighten nose. We know that government has time and again talked about GST invasion and how that continues to be a problem that the GST Council is also mulling over.
That's the way we are. I mean, we look at every new thing as an opportunity to save money, and that's what probably companies did, small companies at least. And even from the GST side, there have been more changes along the way. Initially, you had to file it every month, and then quarterly, and then yearly. redo the whole process. Now it is not every month, it is quarterly and yearly. But yeah, the laws are modifying themselves, updating themselves, and so these problems are happening. There are people who saw a loophole, they saw an opportunity and they made use of it. It's good that those are being detected.
All right,
and,
good. Of course.
Done away with, yeah.
Of course, good news that they're being detected, but numbers there on your screen telling a picture of GST evasion, government trying, of course, its best to recover as much as lost money it can. It has only been able to recover 1/3 of the money it has lost due to evasion so far. But moving on, and I think another interesting story that is coming in, and by the way of the economies of influencer, how influencer economy seems to be doing really well, but suddenly also not doing too well, because many companies who had taken or onboarded these influencers to run promotions, marketing for them, realize that the actual figures, which could be really large in terms of the number of views that you get on your video or the followers that you have on social media, could be fake, could be followers that you've actually bought, and they're not your really true original followers.
Yeah, they could be, the fake ones could be as high as 60%, according to the report from Clug India, which is a B2B platform which works with the WPP, Reliance Jio and firstcry.com. So they came out with this report that 60% of the followers of major influencers are inactive, non-credible, fake.
Okay.
Now, and these fake followers are in different forms. There's synthetic bots, which are not real, fake human farms, so basically just hyping up the numbers. So brands are taking the biggest hit. Close to 60%, as I said, followers of leading brands are seemingly not real. There are close to 80 million social media influencers in India.
A huge number.
So that is how many, and 60% of their followers, if they are not real. So you're looking at how the amount of money that could be spent on influencer-driven marketing will rise 25% by 2025 to a figure as big as 2,500 crores. Just influencer-driven marketing by leading brands in India. So that is the amount of money we are looking at. If they are putting that kind of money, and if only 40% of that is giving them returns, and 60% is just going somewhere where nobody knows where, to something that is unreal, not real, then you can see how much correction there needs to be done in this space in the brand marketing.
Brand marketing, interesting. Krishna, one thing that pandemic also did was take a lot of substantial chunk of marketing budget from big faces to small influencers, and these influencers could have followers anywhere to the tune of 5,000 to 10,000. You become an influencer, God knows what's the criteria to become an influencer, by the way, but 80 million influencers just in India are likely to double up, triple up in days and months to come. But it is a cause of worry when many of these influencers turn out to be fake, not true, not genuinely acquired, perhaps paid for, or even bots. And companies are now waking up to the root shock that while they were saving money from spending on big marketing projects or hiring a big sort of face to promote their brand and going for small players, that could have saved them a lot of money. But it's not really happening that way, is it? With 60% of the followers turning out to be fake for many of these influencers.
Well, the first thing that brands look at, apart from target audience and target groups and everything, is the overall number of followers. And if you ask me what qualifies to be an influencer, that's all that matters. If you have a great number of followers,
what is a great number?
With whatever you want. Okay. How about this? People like me have 300 followers. Are we influencers? No. My wife has 18,000 followers. Is she an influencer? Yes. Somebody else has 18 trillion followers. So there is very clear in terms of how many people you influence. If you can influence people in multiple thousands, Shweta, do you have those multiple thousands of followers, Shweta?
I don't.
You are an influencer yourself. If you have at least 10,000 followers, you can consider yourself a small influencer. Okay. It's like the movies, Shweta. You can act in a 1 crore rupee movie. You can act in a 500 crore rupee movie. You're still acting in a movie. And of course, a 500 crore rupee movie will be watched by 500 million people, and 1 crore rupee movie will be watched by 1 million people. But the fact of the matter is that if you're wondering what qualifies an influencer, people wanting to listen to you on social media and willing to follow you on social media. Whatever it is that you have to offer. You could be offering travel advice, relationship advice, health tips, investment tips, life tips, or just you're going to put up pictures of your cat or your dog because that's interesting, and people are willing to follow any updates on that front as well. It doesn't even have to be anything that is productive or that is completely useful. If you want to understand what is an influencer, it's really simple. Whether you like it or not, whether I like it or not, at least 10,000, 20,000 people are willing to follow the updates of that particular individual or entity that registers themselves with a social media account. So I'm very clear as to what an influencer is. It's very simple. It's not about the most important information. It's not about the greatest things in the world. It is just that I have to say something and at least 10,000 people are willing to listen.
Right.
As brands are concerned, because let's face it, neither you nor me, 10,000 people are not willing to listen to what you and I have to say at this stage. Whereas I have a friend who puts up pictures of their dog. 50,000 people are willing to watch what the dog ate for breakfast. Mm-hmm. So there you have a business proposition. A dog food manufacturing company likely to not even that.
Yes.
Not even that. Forget the brands. I'm saying that people who are willing to follow. Therein you build a following, and then you have companies wanting to cash in on that following.
Right.
And therein is the difference that you're talking about, where they say so many following, say 10,000 following. What if out of 5,000 of them are bots? Mm-hmm. Who are started following you and you didn't know? And at the same time, the influencer companies which play the influencer don't know. What I think really is happening here is a larger chink in the social media follower ecosystem, which I think has been suddenly quickly overestimated because of the pandemic. Bear in mind, influencer marketing in India is expected to grow at 25% to 2,500 crore rupees worth of business by the year 2025. That's how fast this business is growing.
Huge number.
The fact of the matter is that how many of those followers that brands just blindly agree to are real followers? That's the big question. Not the question not just for brands, but for social media companies as well.
Okay. And of course, that would ensure that brands will have to vet these followers better.
Brands should be looking at the good old days of column centimeters and 10-second spaces.
Okay, 10-second spaces and column inches, that could be the good old days, but that's not going to work out anymore. So, of course, brands will have to get more creative around figuring out who are these genuine influencers and which of these have fake followers. All, of course, that is going to be the work that brands will have to do. But we're going to end this bulletin for now. Thanks very much for watching.
With all this gear, you must be wondering if I'm climbing a mountain. Well, let me give you a wider look of this place. This is Asia's largest mountain of shame.
A mountain of waste, almost the height of the Qutub Minar.
When you enter capital cities of some of the biggest countries in the world, you don't have 3 garbage mountains waiting to welcome you, depending on whichever side of the city you enter from.
The thing is that a lot of times we talk about landfills only when there's a fire at the landfill. You need to understand that